Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so let's start off with the XJO. We're still hanging around 6,600. We've been stuck here for a little over a week now. And no surprise, really, last few times we've come to this level, it's been a key reflection point. So, back in the past here, on the way back up on the COVID recovery, we paused here for quite a long period of time. And then if I keep going back just before COVID, we did also pause here for a very long period of time. When I say a long period of time, I'm talking about 4 to 6 months where we've just strict, really dead sideways movement. So look, that's once again on the table here. I feel we're going to see more of a W-shaped recovery this time around rather than that huge V-shaped recovery we saw. So what that does that mean? It means that we're going to probably see some volatility and some whippiness around. And I wouldn't be surprised to see our market all the way up at 7,000 at some point in the coming months, but then all the way back down near 64. Right, I do believe it's going to sort of be that wide, huge, whippy type range coming in for the next sort of 2 to 3 months quite easily. We've got a lot of uncertainty to come, guys. All right, so throughout the rest of this year with interest rates and inflation, and then that tug of war between the two, it will probably play out for a bit longer than what many people think. But some kind of rally on the back of inflation topping out is on the table soon. But then after that, okay, that tug of war will continue. All right, so our market's stuck sideways. Downtrend is obvious. Pretty broad-based pennant there that we're looking to see whether it's going to break higher or lower. If it breaks lower, the downtrend continues. If it breaks higher, then we start adjusting our view a little bit. But for now, the trend is down. But we're way oversold inside that trend. That's for sure. All right, so coming across the US market, you can see here they're still stuck inside a triangle pattern. And whichever way that's going to break is obviously going to tell us a lot. But, to the downside, guys, it's going to come back down to maybe 35. 35 is my key target for this overall move. It's the target that's presented itself from the head and shoulders up here. It's also the 200-week average, and it's also a key Fibonacci retracement level. So for me, 3,500 is key. If that breaks, then I start really reevaluating how bearish I am. And, if it breaks below 35 and uses that as resistance, I become very, very bearish. But if it holds 35, then I'll start, trying to predict if that's the bottom or not and look for certain signs for that. All right. So it's a dynamic thing right now, guys. Nobody knows where the bottom of this market is, right? So we're obviously going to be continue to look at key levels and continue to look closely at the price action at those key levels to help us determine that from a technical standpoint. And obviously fundamental, there's a few other things to talk about there as well. So which way this breaks is probably going to happen, be determined by how the CPI reading comes through on Wednesday night, okay, the US CPI. So that's one key bit of information we're looking for. The other one's obviously the Fed at the end of the month. Okay, so technically right now we're stuck in a sideways pattern, consolidating, waiting for a breakout. So the last CPI reading came through much higher than, or a little bit higher than expected, and that saw a lot of speculation around the Fed lifting rates a lot higher than expected, which they did, 0.75. And this reading is going to be much the same. If it comes in as expected at 8.8, which is higher again than last time, then the Fed's probably going to lift again in a very strong manner, and will continue to do so until that CPI reading comes back down. So that's what we're looking for, guys, is that demand destruction, prices coming down, and that reflected in some of our data that we're seeing come from the US. We're not seeing that reflected just yet. Okay, we're really not. Although what's changed since the last time is commodities have crashed. Okay, so we're seeing the likes of a lot of agricultural products, wheat in particular, come down over 30%. Copper's down 25+%. Oil's come off from 120 back down to 104. So we're starting to see the commodity space correct, and that's across most commodities that have fallen, right? Coal's remained high. I think US gas has remained high. There's a few that have remained high, but the vast majority of commodities have fallen in their futures prices. So what that should do is give us indication that inflation's perhaps topped, but we won't see this flow through to real CPI and real inflation numbers maybe maybe for a month or two. Okay, so I'm not 100% sure whether the Wednesday night's readings are going to come a little bit lower than estimates or not. I suspect, though, for the July reading, which comes out in August, we'll start seeing that revised down. Okay, rather than being revised up. At some point, the lower commodities have to flow through to real prices, which will flow through to actual CPI coming off a touch. It's hard to tell how many months it's going to take for that flow-on effect to happen. Nonetheless, everything that the central banks is doing is starting to work. We're starting to see inflation expectations come down. We're starting to see commodity prices come back down. So this whole demand destruction thing is actually working to help inflation, but it is also sending the US towards a recession. So we've saw 1 quarter of weak economic or negative GDP data come from the US, right, for the first quarter. Second quarter, it's projected and predicted to be negative by a few analysts out there at the moment. And we're just going to have to wait and see at the end of this month when we get that reading whether it will be so. But it's not the question of whether the US goes into recession or not, because I think most people believe they will. It's going to be how bad is this recession going to get? For how long will central banks continue to lift rates whilst in a recession is going to be the big question. So, and that's going to come down to inflation. So they're trying to get inflation down as quickly as possible so that way when this recession does come, they can just sit on their hands rather than continuing to lift interest rates. Can you imagine, right? So that's the game right now. It's the tug of war between, interest rates going up, inflation coming down. And if inflation doesn't come down, interest rates are going to continue to go up. Therefore, the recession may last longer. And that's the tug of war we're watching play out right now. Who's going to win? Okay. And hopefully we just get the central banks to a fairly neutral level, 2.5%, something like that. And hopefully they just back off and sit there. Right? Because if they go much higher than that, they're going to do more than just destroy some demand, right? We're going to see, might see a much larger recession and therefore a lot more further downward movement in markets, right? So the quicker the inflation comes under control, the better is the current theme. All right. And then once we get to that point, we'll go to the next theme. And that's going to be we can't let inflation get back out of control again. That's the tug of war that we're going to see for the rest of the year, guys. All right. So you got to think about that. The first phase is get inflation down. Second phase is keep it there whilst trying to help keep prices under control in the stock market and in other markets, right? Because remember, price stability is part of the central bank's mandate. So it's going to be a huge tug of war here, guys, because they've got to stop markets from selling, but they've also got to stop inflation from rising. And they've got to try and do this whilst creating a soft landing, right? Not going to be easy, and that's what's going to really control the direction of the markets at the moment. That's the current theme. That's what's got people worried. The other thing that's really kicking off is US reporting season this week. That's going to give us a close insight onto what stocks and sectors are doing well or very poorly, what's been priced in and what hasn't. You got stocks like Microsoft that have fallen so much, sitting at like a 27 PE, which is actually a really good price for Microsoft. And then we'll get to see inside under the hood of how the earnings are actually going compared to expectations. Okay, because on expectations are at a 27 PE. They could be better than that, could be worse than that. Let's have a look, see how they're performing, and then we'll get an insight on whether that's going to start becoming close to a buy or not. Right? I suspect it might. Okay, so the US reporting season is extremely important at the moment because you got to start picking the stocks where there's some value still. Okay, you got to pick the stocks that are going to be able to weather an upcoming recession that can still put out strong forward guidance. At now would be a much lower PE than what they were only 3 or 4 months ago. So there's going to be some buying opportunities coming out of this US reporting season. We'll be able to pick the themes and the particular stocks and subsectors that might perform well through the next part of this year. All right, so US reporting extremely important. Look, there's probably not much else to say, guys. Look, the two next big catalysts for the actual whole market sentiment. One's the CPI reading. The next one's the Fed at the end of the month, and then also I forgot the GDP also that will establish whether the US is in a recession or not. So 3 key bits of information throughout July, and then tack on top of that US reporting. No wonder why we've been going sideways the last 2 weeks. Everybody's waiting for this huge amount of information confirmation to hit. So expect some movement on the horizon for the rest of July, guys. Would be my prediction here at this point. Which way it goes is going to depend on the news. Okay. All right. So that's it. That's all I've got for you today. Thanks for listening in. Take care and bye for now.